In this video, we're talking about how to invest in gold online. If you've ever thought about owning gold but didn't want to mess with buying coins or storing heavy bars, this one's for you. We'll walk through the most popular and practical ways to invest in gold online, including gold funds, mining stocks, futures, and more. And if by the end you decide that this makes sense for you, I've listed the top-rated gold IRA providers along with any special promos they're currently offering. So if you want to check that out, just click the first link down in the description of this video. It's an affiliate link, which means I may earn a commission. Thank you so much for supporting my channel, and now let's get started. So you might be thinking, can I just buy gold through a fund instead of owning the actual metal? The answer is yes, and it's probably the easiest way to get started. You can do this through something called an exchange-traded fund, or ETF for short. It's a fund you can trade like a regular stock in your online brokerage account. When you buy a share, you're basically buying a small piece of gold, often about 1/10 of an ounce. Now, you don't need a lot of money to start, and there's no hassle with storage or insurance. It all happens online and is super liquid. You can sell your shares during market hours anytime. The average annual fee is around 0.61%, which is lower than many other types of funds. What if I want a fund that's managed by experts? Then you might like mutual funds that include gold. Mutual funds are a bit different from ETFs. While ETFs usually just follow the price of gold, mutual funds can be actively managed. That means the team is making decisions about what to buy and sell inside the fund. Some mutual funds hold actual gold, while others invest in gold mining companies. A few even mix gold with other commodities like silver or oil. So it's a broader way to invest in gold, but it also means you're not always getting pure gold exposure. That's something to keep in mind. Still, these funds are easy to buy. Just like ETFs, you can get them through your regular brokerage account or even inside a retirement account like an IRA. You don't need to research individual companies, and you can start with a small investments. The costs are generally low, and they give you some nice diversification, especially if you don't want to pick stocks yourself. Can I bet on the future price of gold? You can, but it's not for everyone. This is where gold futures and options come in. These are contracts that let you bet on what the price of gold will be in the future. You don't actually own gold when you buy these. You're just trading on price movements. A futures contract is a deal to buy or sell a set amount of gold at a future date. One contract might be for 100 ounces of gold, which means big money is involved. This is why futures are usually better for experienced investors. They also come with lower commissions and smaller margin requirements. But prices can move fast and losses can be big. Some contracts even require actual delivery, so it's important to read the fine prints. Now, options are a bit safer. They give you the right, but not the obligation, to buy a futures contract at a set price before a deadline. You'll pay a premium for that right, but your losses are limited to that premium. That's why some people prefer options over futures. What if I want to invest in gold companies instead? That's another solid route, and it's a bit different from just buying the metal. When you buy stock in a gold mining company, you're investing in a business that makes money by digging up and selling gold. If gold prices rise, these companies usually see more profit, and your stock might go up too. Now, one big benefit here is income. Unlike gold itself, mining companies can pay dividends. That means regular payouts while still being exposed to gold. This option also brings some risks though. You're still investing in a business, which means you're exposed to things like labor costs or mine shutdowns. What are gold royalty and gold streaming companies? These are companies that don't mine gold themselves but still make money from it. A gold royalty company pays a mine up front and then gets a small cut of the revenue from that mine for years to come. A gold streaming company does something similar, but instead of cash, they get paid in gold. These businesses are attractive because they don't have to deal with hard stuff like digging or equipment. They just collect income from other companies that do the work. So they carry less risk and can still benefit from high gold prices. Some of these companies are public too, so you can buy shares in them like any other stock. What if I'm okay with taking more risks for a bigger reward? Then you might want to look into junior gold miners. These are small companies that are just getting started. Some are exploring new sites. Others are working on early stage mining projects. They don't have a lot of history or proven reserves, so there's a much bigger risk that they won't succeed. But if they do strike gold, like Literally, it can lead to massive gains for early investors. Just don't treat this like a safe investment or a hedge. This is more like speculation. Only put money here that you can afford to lose, and don't bet the farm on one small company. Are there gold funds that actually hold real gold? Yes, and they're kind of the best of both worlds. There are ETFs and other exchange traded products that are backed by real physical gold. So when you buy a share, the fund goes out and buys actual gold bars, stores them in a vault, and keeps track of your share. This setup gives you exposure to real gold without needing to store it yourself. You can buy in and out easily, and the fees are usually very low, sometimes as low as 0.11 or 0.12% per year. That's way cheaper than storing your own bars. Now, some of the biggest funds in the US are SPDR Gold Shares, known as GLD, and iShares Gold Trust, known as IAU. Both are super liquid, easy to trade, and trusted by investors all over the world. Just remember, you don't actually take possession of the gold. It stays in the vaults. You just own a claim to part of it. So it does require some trust in the fund manager. So what's the best way to invest in gold online? Well, that really depends on what you're looking for. If you want something simple and low cost, ETFs backed by gold are probably your best option. If you want expert management, mutual funds are worth a look. But if you've got experience and a bigger budget, futures and options offer more control but come with more risk. And if you want income and long-term growth, gold miners and royalty companies could make sense. If you're chasing high rewards and don't mind risk, junior miners might be your thing. And if you just want real gold stored safely without the hassle, go for a fund that holds physical gold and trades online. And don't forget that if you decide this makes sense for you and you would like to invest in gold, I've listed the top-rated gold IRA providers along with any special promos they're currently offering. To check them out, click the first link down in the description of this video. Thank you so much for watching this video. I hope it was helpful. Till next time.